credit score in the 700s gets you a 30-year mortgage at 6.2%. A credit score of 810 gets you the same mortgage at 5.4%. On a $400,000 loan, that gap is $193 a month for 30 years. $69,000 over the life of the loan vanished because of an 80-point credit score difference. By the end of this video, you're going to know the exact 6 moves I used to go from 744 to 822 in 19 months, the 3 myths costing you points right now, and the 1 move that adds 20 to 30 points in 7 days that almost nobody talks about. Okay, so welcome back, ladies and gentlemen. Affiliate disclosure up front. Links in the description include some affiliate codes. If you apply through them, I receive a small commission at no cost to you. The strategies are independent of the affiliate pay. Look, here's the thing. The credit scoring model that matters for mortgages is FICO 8 and FICO 10. VantageScore is for renters and personal loans. The two systems weight different factors. A common mistake: optimizing for the wrong one. If your goal is a mortgage in the next 24 months, FICO 8 is the only score that matters. Pull it from iFICO Direct, not from Credit Karma. Credit Karma shows you VantageScore, which can be 60 points off your true FICO. Let's get into it. Move 1. The credit utilization sweet spot. Conventional advice says keep utilization under 30%. That is wrong if you are optimizing for a mortgage. The FICO 8 model rewards utilization between 1 and 9% across both your individual card and your aggregate. Hitting 0 is actually slightly worse than 2%. FICO interprets 0 as you not using credit. The trick: pay your balance down to about 1 to 2% of the limit 1 week before the statement closes. That is the balance the issuer reports to the bureaus. Whatever you spend after that statement closes does not show up on your credit report for that cycle. This single move took me from 744 to 772 in 1 statement cycle. 28 points. Move 2. Credit age preservation. Closing old cards drops your average age of accounts and crushes your score. Never close your oldest card. If it has an annual fee you do not want to pay, downgrade it to a no-fee version of the same product line. Chase Sapphire Preferred to Chase Freedom Unlimited. Amex Gold to Amex Green to Amex, no annual fee. The credit line carries. The age carries. The fee disappears. This move alone preserves about 30 to 50 points on long-term scores. Right, move 3. Strategic hard inquiry timing. Every hard inquiry drops your score 5 to 10 points temporarily, recovering in 3 to 6 months. If you're going to apply for multiple cards, batch them within a 45-day window for FICO 8 purposes. The model treats multiple inquiries within 45 days as 1 inquiry if they are for the same type of credit. So 3 card applications in the same 2-week window equals 1 hit, not 3. I scheduled my 4 card applications for the same Saturday morning. Net score impact: 6 points, not 24. This is the timing window almost nobody knows. Here is the share trigger I want you to remember. The number 1 factor in credit score, weighted at 35%, is on-time payment history. Missing a single payment by 30 days can drop your score 100 to 110 points. 1 bad month erases 2 years of careful optimization. So the foundation of any credit strategy is autopay on every account, set to at least the minimum, with a notification 2 days before the due date, so you can verify the auto deduction actually fires. The 35% factor is so big that nothing else you do compensates for missing it. Honestly, move 4. The credit mix bonus. FICO rewards having 3 to 4 different types of credit accounts active. Revolving credit like credit cards. Installment credit like a car loan or a personal loan. Mortgage credit. Retail credit like a store card. If you only have credit cards, your score caps around 775 no matter what you do. Adding 1 installment account, even a small one, like a self-credit builder loan at $50 a month, adds 8 to 15 points after 6 payments. The cost is roughly negligible because the interest is so small on a small loan. The self-credit builder loan is the cleanest installment ad for someone with a thin file. Move 5. The dispute strategy that actually works. Every credit report has errors. The Consumer Financial Protection Bureau estimates 1 in 5 credit reports contains a material error. Pull your 3 bureau reports at annualcreditreport.gov. That is the only free source, not the imposter sites. Go through each line, and look for 3 specific things. Wrong account status, wrong balance, wrong date opened. File a dispute online with each bureau separately for any error. Dispute resolution takes 30 days. About 60% of disputes result in the item being removed or corrected. I removed 3 legitimate errors and 1 ancient collection from my report, gained 18 points in 45 days. The strategy that works is being calm, specific, and showing documentation. Random disputes without specific challenge points get rejected. Look, what is the one thing you've seen on your credit report that you knew was wrong but never fixed? Drop the error in the comments. I'm going to read every reply. The most common errors are repeated across thousands of reports. Naming yours might save someone else. Move 6 is the underground tactic. Become an authorized user on a family member's old card with a long history and low utilization. The credit line and history of that card get added to your credit report. If your mom has a card she opened in 1992 with a $15,000 limit and a perfect payment history, adding you as an authorized user instantly transplants 30-plus years of history onto your file. This works at major issuers like Chase, Amex, Discover, and Bank of America. Some issuers don't report authorized user history. Capital One famously doesn't, so confirm before relying on it. The score boost averages 40 to 70 points for someone with a thin file. Now the 3 myths. Myth 1. Checking your own credit hurts your score. False. Self-checks are soft inquiries. Pull yours weekly if you want. Myth 2. Closing a card increases your score. False. It almost always decreases your score for the reasons we covered. Myth 3. Paying off a collection account restores your score. Mostly false. Paying off a charged-off account doesn't remove it from your report. It just changes the status to paid. You need a pay-for-delete agreement in writing before paying. And most collectors will agree to it because they get the cash. Right? Honest caveat. None of this works overnight. 6 months is the realistic minimum to see a 30-plus point gain. 18 to 24 months for a 60-plus point gain. So this depends on your situation and your timeline. If you have a mortgage closing in 90 days, the only move that matters is the utilization sweet spot. Move 1. Run that move, nothing else, and your closing day score will be higher. Honestly, hit subscribe. Next week, I am breaking down the exact authorized user playbook, which cards work, which issuers report, which family members to ask, and the conversation script to use so it doesn't feel like a favor. That single video has helped more people get into homes than anything else on this channel.